Professional Broke series. We thank you so much that you have chosen to spend a few hours with us discussing a very important topic for today's session. My name is Nathalie Nyonzima, and I am the co-founder of the Professional Broke series. Allow me to just present. I hope technology will be on my side today. Let me know if you can see my screen. Thumbs up, yes, anything.
We are good. We can see the screen, Natalie.
Awesome. Thank you so much.
Yes, now we can see the screen. Go ahead.
All right, thank you, everyone. We are so quiet. Could you maybe, let's use the chat box for the next 30 seconds. Can you just type your name and where you're joining us from? I'm going to just allow us 30 seconds to just test the functionality of the chat box. Loriumiza, yes. Who's joining from Guama, Ghana? Okay. Inang Geflohen, yes. Oh, we have people from Gabon, from Zimbabwe, Ora from Maseru, Kahin from Bujumbura. Oh, wow. Claudia from Bujumbura. Amazing. Truly a Pan-African session this evening. Awesome. I hope you are eager to learn as much as I am this evening. So, what is Professional Broke series and why did we start it? Well, oops, I hope we're able to see my screen. Awesome. Well, Professional Broke series is a story of three women who are friends, the exact same ladies that you're currently seeing on your screen. And we have a different professional background. One of us is a banker, another one is a tourism expert, and I am a professional accountant. And we started this series after individually realizing that professional success didn't necessarily translate in wealth creation. Each one of us had spending habits that were unsustainable, a type of habit that would rob us from getting the comfortable future we all aspire to get to. And I'm going to just share with you each one of our story, just so you get to read. Again, it's a very small sneak peek that hopefully will paint a picture. And so we decided, the three of us, to intentionally invest in learning to manage our personal finances. We took a class where we learned from seasoned experts. We read books, we listened to podcasts, we did our own research. We actively listened, we took notes, and most importantly, we started taking action and applying the best advice that we were getting. And we also held each other accountable. And a year from our first class, we're happy that we are still on this journey together. And so, as we started this journey together, we didn't want to do it alone. We wanted to have a candid conversation with other professional women like us who truly want to thrive financially while creating the life that they want, but who don't necessarily, and we know that sometimes we don't even know where to start from or where to even get trustworthy information. And so, therefore, in January, we kicked off our first session and we chose the word broke because we realized that being successful professionally didn't shield us from wondering where our money went towards the end of each month. So Professional Broke series is a safe space to empower women like ourselves to be financially literate, to take responsibility for our own financial education. And I truly hope that today's session will become your own turning point to decide to invest in your own financial literacy. So, what has been our journey so far? Well, like I mentioned, we started in January and we covered a number of topics. We uncovered our money personalities. We did a session on budgeting. We learned on the concept of time value of money. We learned investment, both on the stock market and real estate investment. And in our last session, we also had a session on the topic of living abundantly. And today we are going to learn about insurance. Okay, I hope that my presentation is going to cooperate. So we do have a few rules we go by. This is a very real conversation based on real life experience. So we keep it real. We also forgive ourselves for our past mistakes. We actively participate. Please feel free to make use of the chat box. Oops, I don't know what's going on. And also try to not compare ourselves with others. And at the end of the day, I will really urge you to take action and set your own personal finance goals. And with that, I would like to hand over to one of my co-founders, Dr. Carmen, to take us away for the next session. Thank you so much and welcome once again.
Good evening, everyone, and welcome to everyone on this particular session tonight. I'm really delighted and honored to have you here. Today, we are going to cover a very, very important topic. Usually, insurance is what I call maybe a subject we don't really much talk about as women, but I think this is the time to be educated and then to be informed for you to take the best course of action. So a few years ago, just a personal story before I introduce our speaker and then our amazing person we have brought for you today. Someone asked me on a very, at that time I thought it was a stupid question. I was like, what is your best asset? If you had to insure something, what is your best asset? And at that time, I think all the answers I gave, I never said it was about me. And then he said, yes, if you have to insure your greatest asset, and your greatest asset is you. If you cannot work, you can't earn an income. If you are not able to do anything, you can't support your family. So the best asset you have to insure is you. So that's something I learned. And then that was my first introduction to insurance. So ladies, this gives me now a great pleasure to introduce today to an amazing lady. Here we go. That's Mandis Miribidi. I'm trying to pronounce the name. She will forgive me for that. She's the current managing director of Liaison Rwanda, a limited company, and is a member of the Rwandan Insurance Broker Association. She started her career in the insurance space in 2001 in Zimbabwe, her home country where she comes from. And then in 2009, she moved to Uganda and then worked there for some time and then went to Tanzania in 2013. And guess what? 2017, she moved to Rwanda. So pretty much she's a very seasoned expert in this matter and understands the East African community. And also she holds an advanced diploma in insurance. She's a certified and probably the professional women we needed to have to guide this conversation. So, and I'm also glad to say that she's currently part of the Inclusive Insurance Innovation Lab in Rwanda, and then which has the purpose to address the challenge of faced in most developing countries when it comes to insurance penetrations, rates, which is quite low, and then how to really leverage insurance as you create your wealth. Particularly to this particular session tonight is what she's going to talk about. So not only I know Mandis since I moved to Rwanda 2018, she has been my advisor. She has been the person I go to when I need advice. And then we had this relationship since 2018, actually January 2018 when I moved to Rwanda. So Mandis, take over, and then this is your platform. Thank you so much.
Thank you so much, Carmen. Thank you for the kind words. Good evening, ladies. I'm excited to be here amongst women that are looking towards empowering themselves and moving forward with their financial journey. So as we start, I probably need to ask you some questions. Maybe just three of you could answer me. Today, we're going to be talking about how to leverage insurance on your wealth creation journey. But just to kick off, can maybe three of you just tell me, do you have insurance? Not insurance that is offered by your employers? And what type of insurance do you have? And why did you take that insurance? Can I just have three people to answer that question? Maybe it can be in chat box or someone could randomly speak so that we have an idea of what we are dealing with in terms of insurance in Rwanda. So can I have any three volunteers to answer that question? Any three ladies?
I can go first. Hopefully, we'll have more. I do have an education policy for my son. Yes. And I bought it because someone told me that education is very expensive.
And do you understand what you're covered for? I think the question always comes back, why did you purchase the insurance, and do you know what the value you're getting from that insurance? We've also, sorry, I'm trying to move this. Natalia, can you help me?
Yeah, yes. I'm seeing a few comments in the chat box.
We have house insurance. Kami, can you tell us why you took out the home insurance? The fire insurance, we've got life insurance, we've got education for the children. If we're looking now at the profile of our hosts, can anyone tell me how insurance would have helped their journey? From what they're saying, we have children, we're always, at the end of the month, would be left with absolutely nothing. Do you think there is a solution through insurance that could have helped them? Or what do we think insurance's role would have been in the life of Carmen, in the life of Natalie, in the life of Francine? Okay, I think I will just go reduce stress. Yes, Carmen. Anyone else? Okay.
I think Iris has her hand up.
Iris has got her hand up. Can we hear from Iris?
Hi, I was just going to say that for me, when I think about life insurance, I think about legacy. Like, what do I want to leave behind? I think Natalie talked about education. Others are talking about fire insurance and all. But I feel like life insurance mostly covers it all, and it's worth, going deep and understanding. So I haven't really subscribed for one because I don't have a clear understanding of what it entitles, and that's why I haven't moved forward with it. Thank you.
Thank you so much for that answer.
Yes.
And is there anyone else? Aurora?
Yes.
Aurora Singer?
Yeah, thank you. It's always a pleasure to find myself in this group. Yeah, I just wanted to answer to your question where you ask if we know why we are buying even insurance. Okay, on my side, I have a life insurance, a house insurance. I don't know, the rest is kind of, either mandatory or, given by my employer. But some of them I choose myself. But it's mainly for bad days. What if, I cannot, earn what I'm earning today? How could I, ensure my kids have what they need, they continue their education? That's for that reason. But I think most of the time, it doesn't mean anything. Actually, we are losing a lot of money paying insurance every year. But okay, I guess that's what we are here to learn from you on how best, we could benefit from those insurances.
Okay.
Yeah.
Thank you so much for those comments. Natalie, you've talked about insurance is peace of mind. And Francine, I feel somehow secured for the future. Very good answers indeed. I think I've been unable to share my presentation from my end. Could I ask Natalia to put up the presentation? And I've been unable to move. So I'll be asking you to move to the slides. Okay, so we can move to the next slide. So whenever we talk about personal finance, which is the journey that we are on, we talk about income, protection, spending, investing, and savings. And if I must say, insurance also is part of your personal finance journey, because it is there under your savings, it is there under investing, it is there under protection. So if we move on to the next slide. So when we are talking about personal finance, we're looking at managing your money. It is encompassing your budgeting, banking, insurance, mortgages, investments, retirement, and tax and estate planning. So the basic concept of insurance is that one party, who is the insurer, will guarantee a payment for an uncertain event in the future, while you, as the insured or the policyholder, pays a smaller premium or a small amount to the insurer in exchange for that protection. So the first pillar, in my opinion, of all your financial plans should be insurance. It is one of the few important tools that brings you closer to a secure future. So when we talk about the benefits of insurance, and I'm going to talk about the benefits of insurance by using examples of my personal life. So as people have already said here, there's the issue of security. What happens to me when I lose my job? And if you are insured, if you have taken out a life insurance, you are secured to some extent. We're going to talk about all those aspects. So my presentation today, we need to make it real. We need to use real life examples. And I have chosen the life story of my mother. So this is my mother's story. So if you see the first picture, that's my mother in her younger days with her beautiful afro, with myself in her hands and my older brother. The next one is my father, who used to work at the National Railways of Zimbabwe. And the next picture is a year before the death of my father, when I was 18. My young brother was just 15 at the time, and my mom was a homemaker. So imagine hearing that the breadwinner has died. You are the homemaker. You were surviving on your spouse's income. Spouse who had said, leave your job, I can take care of you. I just want you to take care of me and my family. So I just want you to take care of me and the children. So here she is, not earning an income, but playing a pivotal role as being a homemaker. And by the time my father died, he left my mom unemployed with 3 children. My older brother has just started university. He was in his 2nd year. I had also just started university, just 3 months into university, and my young brother was still in high school or secondary school. He was just starting his Form 4. I think that's your S4 here. So my parents had a house. They were paying off a mortgage. And on his 25th anniversary at work, he had just received his long service award. He had decided to go and buy some assets. And at that time in Zimbabwe, we used to call it hire purchase. So you could go and buy furniture on credit. So he had bought a lot of property on hire purchase. And here was my mother left with those debts. So you are thinking, am I going to lose my house? Am I going to lose my furniture? Because this was just a sudden death. It was an accident. So what was she going to do as a person that was not earning an income? I must say this is what started my journey to insurance, because this is what made me realize the importance of insurance. So luckily, my father, being employed with NRZ, had a pension. NRZ, which is the National Railways of Zimbabwe, has one of the biggest pension funds in Zimbabwe, the National Railways of Zimbabwe Pension Fund, owns numerous properties. So at the time of his death, my mother was entitled to that pension. So she was paid a lump sum, and some of the money went towards purchasing an annuity. So when we talk about pension and annuities, this is money that an annuity from the money from your pension, you used to purchase an annuity, and you are able now to get a monthly income. So you are now able to get a monthly salary from that annuity. So you now live as if you're working because you're earning something monthly. So you can imagine, my mom has got a lump sum. She goes back to her house. She does renovations. She extends the house. She renovates the cottages and puts in tenants in the cottages to be able to earn extra income from the cottages. So 1, insurance has secured her future. She now has an income. She now can buy food for her children. Secondly, he left life policies. Sorry, we are still on the other slide. He had life insurance. Not only was this man very organized, he had already thought, if anything happens to me, my family should be left with something. So he had life policies in place, and they made a payout to my mother. My mother, being the person she is, opened fixed deposits for her children from those life policies, and also bought another life policy for herself. So she gained something. The life policies were able to pay for education. Not only that, as you are aware, there's something called credit life insurance. Whenever you take out a loan, you have got a loan from KCB, you've purchased, you have applied for a mortgage, the mortgage has been approved. Most people go into the bank and they are just told one of the requirements is insurance. You just sign off and you don't know, you just want the loan. So you sign and tell the bank you can deduct, but you don't know the reason why you're taking out this credit life. So the credit life is basically telling you that where you have a mortgage, in the case of the unfortunate event that you are to die, you are left, your children are left with the house, they are left with the property, even the car is not taken away because the insurance then pays off the loan. So you see, you have protected your children's wealth. So this is the journey of the wealth creation that you are on, because your children's future is secured. So the credit life loan paid off the mortgage. So my mother had no debt in terms of the house. So she was not worried about the house. The house was secure. Then we also had the furniture that had been purchased on what we called hire purchase, that is credit. And luckily, the stores, the department stores, the Mikkels in Zimbabwe, whenever you purchase something on credit, you automatically got insurance. So if something happened to you, once again, the loan or the credit is cleared by the insurance company. So my mother had zero debt after my father's death. Everything was cleared by insurance. So we move on to the next thing. On his death, you know, when people die, now this is both for my father and my young brother. When my father died, we didn't have to start waiting for relatives to contribute. And if anything, in Zimbabwe, if you are to die without a funeral policy, I think people will be cursing you. They will really be cursing you, because we really believe in purchasing the funeral policy. And our role on your funeral is just to cry or to celebrate your life. So we don't really believe in contributing towards a funeral. What people will contribute and what we call chema is just to comfort you and say money to assist with the kids. But we expect that you actually have a funeral policy. So the way the funeral policies would work in Zimbabwe is that in the case of death, you would have already selected the type of coffin in which you would want to be buried in. You would have already selected that I want this type of car to be the one that carries the type of car that will carry my casket, or whatever type of coffin that you would have selected. You would have selected, I want buses to ferry people to, if you're going to be buried in the village, for some of us that are very African and always who want to be taken back to the village, the buses are provided, the tents are provided, the chairs, and now even groceries. Now, if you look at the funeral policies in Zimbabwe, you still get to, if I'm here and something is to happen to me, then my body will be repatriated back to Zimbabwe. And then those accompanying me would also have air tickets. Now, not to say there are no funeral policies here in Rwanda. The funeral policies are there, and usually you'll get a cash benefit. So I know there is this East African thing that if I talk about my funeral, something is going to happen. I'm cursing myself, but it's only just planning for the future and making sure that when you die, you also don't inconvenience other people so that they are running around to look for money to be able to bury you. So it is essential that you have a funeral policy in place, that when something happens to your loved ones, what you simply do is go to the insurance office or send an email, and within 24 hours or the maximum 48 hours, they would have provided you with cash. And Those people who have done the funeral policies with the likes of Sanlam V know that within 24 hours, your claim is paid. So it's something that we need to now think about as Africans, that when we buy such policies, we are not saying we are going to die, because we all know that at some time we are going to die. It's only when. So these are essential. You are planning your future. You are ensuring that your loved ones are not inconvenienced. You are protecting your children. So indeed, my father to me was a great man and a wise man, and he did take out insurance so that his children would continue with the life that they had prior to his death. So he is the one that actually motivated me. I saw the value of insurance, and I knew I had to be part of the journey and to sell insurance and actually say how important insurance is. Now, when we move on, and what most people have been talking about is the education policy. Oh, this is now my mother. She's retired. You see, she's enjoying lunch with her friend, looking very beautiful, and this is her home. So she has done so well for herself. So her and her husband planned very well for their life. So if you look at my story now, my story is that I got pregnant very early. So on my right, that's the day of my graduation. And there is my baby who didn't want to leave me at my graduation party. He's holding my hand. So I had a baby when I was very, very young. So I had my son when I was in second year. And of course, being a single mother, I was thinking, how am I going to manage the fees of my children, particularly university? I want the best for my son. And of course, at that time, that's when things were starting to get a bit bad in Zimbabwe, the hyperinflation or the runaway inflation. Things were starting to change. So it was looking at the fact that I want my child to have a good future. I want him to go to a good university. I want him to go to a good school. So you start planning early. Even for those between 20 and 30 who have no children, this is the time to start planning. You don't have to purchase the policy as an education policy. You can just purchase it as a term, what we call an endowment policy, which is just for a period of time. The younger you are, the longer your policy is able to run, and the lower the premiums. So if you're thinking about buying a house, you're thinking about education, this is the time to take it when you're still young. So those in their 20s, start thinking about it, start planning ahead, and it can be for any project. Right now, I'll concentrate on the education plan. Even without children, if you're planning to have children, this is the time to start thinking about it. So an education policy is actually what we call an endowment policy. It is a combination of life and savings. So in the case of death, it will pay. If you don't die by the maturity of the policy, you receive your savings plus a bonus. So this is what I thought for my son, that I want something that will be able to secure his future. So I started planning early. Unfortunately, in Zimbabwe, things didn't turn out very well because of hyperinflation. But when I moved to Uganda, I started another education plan because he was still in primary school, so I could plan for his university education. So my son is now doing his master's. He's in Cyprus. He's doing his master's in oil and gas engineering. And this is because the education plan has worked for me. So if we move to the next slide. So what I have put for you is an example of the education policy here in Rwanda. This is through Sanlam V. So when people would take out the policies, so what I've used is a female aged 35. Your child is currently 2 years, and you are taking out the policy for secondary school. So if your child is 2 years right now, we expect him to start secondary school in the next 10 years at about 12 or 13. So you would take out an education policy for 10 years. So you can determine the premium. So it really depends on your budget. So when you're going out for an education policy, you go and see your insurer or your broker and ask them, this is my budget. What can I get from my budget? This is what I'm able to afford on a monthly budget. This is my age, and they'll calculate for you how much you will get and at the end of the term, and what are the guaranteed returns. So the example that we've used, this lady was saying she would pay 50,000 per month. So the number of years in secondary school are 6 years. So on that 50,000 per month, we are saying at the end of the 10 years, every year. So the way the Rwanda policies are different from the other markets. So here, the Sanlam V policy will pay you on a yearly basis for the school fees. So they'll give you the amount of the school fees, and it is what you would get. So on an annual basis, at 50,000 per month premium, they are paying her 1,155,000. Yeah. So at the end of the 10 years, it means as an individual, you would have paid premiums worth 6 million. But what is paid when there is no death, and for the 6 years, when we add the 1 million, the 1.1 million for the 6 years, you pay you actually get 6.9. So someone here will say, but that's a very low return. And then I would remind you that this is a combination of life insurance and savings. And this is the savings bit, because part of that 50,000 premium goes towards the risk benefit, which is the life insurance. So if the insured dies before the policy maturity, supposing you've taken out a policy for 10 years, and in the unfortunate event that there is a death within 3 years, it means you would have only paid a premium of 1.8 million. So what happens in that case? So if we move to the next slide. Even before the maturity of that policy, they will start paying your beneficiary something. So person has died in the 3rd year. What they will start paying is 50% of what you'd have been paid yearly at maturity. So every year, your child is getting something, but this is not, it can assist in the education of where he's going, or it can just assist in the livelihood. Then when he gets to secondary school, they will start paying the premium. They will start paying the fees as before. So in this case, what you have put in is 6 million, and what is paid is 10.9 million, which is not bad, and you would have guaranteed the future of your children, right? So what is covered under the life policies? So it's death. So when we say life insurance, it's not just death. We're saying on some policies will pay on death and some will pay a double benefit where in the case of accidental death. So if you're involved in a car accident where your sum insured was 10 million, then instead they'll pay you 20 million. We also have what they call total and permanent disability, where you are injured and can no longer earn an income, or you are no longer able to participate in any income generating projects because of your injury. You are also paid the sum insured as if that would have been payable at death. So some will pay it out as a monthly payment and others as a lump sum. And then we have what we call waiver of premium. If you are injured and you can't work, your premium is stopped, but at the end of the 10 years, then you will, at the maturity of the policy, you will then receive the payout, but you would have stopped paying premiums at the time of permanent disability. Then we also have accident hospitalization. If you are injured and you are hospitalized, they will reimburse you the cost of hospitalization up to a specified amount. So life insurance is very broad. If you go to the credit life, it even includes retrenchment. And we know that with COVID, that is what has been happening. So you need to think about that and secure your future. So when we talk about life insurance, don't just concentrate on education. We also just have a life policy that can just be like the education policy. You can also take it just for 10 years, or 5 years, and say in 5 years, I want to purchase a car, so I'm going to put aside money, or I want to purchase a house, so I'm going to put aside money with the insurance company. So you're building your wealth, but if something also happens before the maturity of the policy, your beneficiaries are paid. So this is how you create wealth with insurance while also protecting you. So, so why life insurance? So with life insurance, as I said, we are looking to provide the best for our families, be it food, be it shelter, transport, certain luxuries, and a good quality education. So our children need the best start in life. And so when you are thinking about that, what about the capital that you need? Someone will be saying, what if what if I want to venture into business? You can use insurance as a savings, where something as a way to save for your capital. And so it's a path to your financial freedom. So life insurance is there to meet all these desires. It grows your money over a period of time so that you are assured a lump sum. In addition, it provides security that should your death or permanent disability rob your family of its source of income, these financial goals can still be made. So ideally, you should have a life cover that is at least 10 times of your annual income. The actual need can also depend on your age and goals to be achieved, then accumulated wealth and those financially dependent on you. So that is it about life insurance. So the most common questions are, what are the age limits for the policy? So you can have a policy from as young as 18 years, and usually the maximum age is 60, 65. The older we get, the riskier we become. So start saving as soon as you can. I think the generation here, the population here is mostly very young, so this is the time to save. Is there a maximum or any minimum sum insured? Yes, definitely. It will depend on the insurer. But if we take, for example, a company like Sanlam V here, the minimum premium is 5,000 per month, but there is no maximum. So you can choose whatever you can afford at that time. Then what was happening in the past, you would hear people saying, I had a pension policy with Sonarwa, then after 3 years or after 2 years, I decided to stop paying premiums, and I went there for my money, and they refused to give me my money. So it is always advisable that you seek advice. You go to insurance consultants, that is your brokers, or you talk to the insurers and understand what you are purchasing, because this is where the trust falls away, because we always hear people saying insurers are thieves, because this is where the trust issues are coming from. There are things called surrender values in insurance, and because insurance is pulling off risk, when you withdraw before a certain time, you affect the entire pool's investment. So you are sort of penalized if you withdraw your savings before a certain time. So in most markets, your policy will only attain a cash value after 3 years. So you can only withdraw after 3 years, but you will not be given the full amount, because remember, this policy is covering both life and savings. The life premium will not be reimbursed, just the savings and the interest. Yeah. And then, is there a benefit to starting a policy rather than later? Sooner is better, because the longer the funding period, the lower the premiums. So if you start early, the younger you are, the lower the premiums. The longer the insurance period, the lower the premiums. So this is the time to start savings. So before I move to the other policies, I am looking at some of the questions in the chat box. We have Iris, and she's saying any taxes to consider. Well, if you look at the pension law in Rwanda, you are actually, by the time you're contributing, it's after tax, so that becomes tax exempt. There are some exemptions on the investment income for pensions. So this is something you need to discuss with your consultants and for those running the pensions. If you look at most of the life policies, you definitely do not pay VAT for life policies. When you get back your investments, I think there was a new law, and something that we've been working at is some of these benefits should be tax exempt. And Rwanda, being a country that is trying to promote savings, is something that they are really looking into, and how they can put tax incentives to encourage people to save more. And but you can contact me and I'll give you the exact details on what taxes will apply. I think Natalie can give you the details. Then my details, and I can get back to you with all the information. So Martha B, is education policy available for unmarried people who don't have kids but planning to and want to plan ahead. So, Martha, you don't have to necessarily take out an education policy. What you can actually do is take out what you call an endowment policy. So the endowment policy will work more or less in the same way as the education policy, because it allows you to plan ahead, because at that time you do not have a named beneficiary. So you take out an endowment policy. It can also be for 10 years. So any term life insurance will work for that. So you don't have to term it an education policy. You visit your insurance and say, I'm planning for my future. I don't have children yet. And you are able to take out a policy and plan ahead for your children. Sorry, I've missed some questions up there. I hope, Natalie, you can get some of the questions that I've missed. Then Francine, how about if the participation period is done, why can't we have the full amount in one bullet payment? Like I said, it depends on the insurer. If you look at the insurance policies, like the career plan in Uganda, the policies in Kenya and Tanzania, most of them pay out a lump sum rather than an annual payment. So you can take out a policy, and you can even in the local market say, I want a lump sum. I don't want the payment to be made in bits and pieces. I don't know if that was the question, or whether it has been answered. Then how do you leverage life insurance for business on a practical level? Elsa, can you elaborate your question? One, we have, I don't know if I'll be answering it correctly, but in terms of your business, one, if you're in a partnership, we have what we call keyman assurance. So if, for example, Mendes brings in the capital and Natalie brings in the brains, we can take in a keyman assurance for both these lives. So if something is to happen to one of the parties, you have a sum insured. Something is to happen to one of the parties, then the insurance will pay. If something is to happen to the brains of the business, it means the business can suffer because you are no longer able to function as you would have. So the keyman assurance allows you to be a bit cushioned as you look for another partner. So this is where life insurance can come in your business. Two, if you're a sole proprietor and you have taken out a loan, or it's a family business, you've taken out a loan as a business, your life will be insured for that loan. So if something happens to you, permanent disability, you are not able to work, then the life insurance will come into play. Then within that, the business side, your property is also protected. They won't take away your assets because you've been injured or permanently disabled and are unable to work. So permanent disability, they'll pay off any loans, which means your property is safe. Of course, you could also use the insurance to pay in to build your capital as savings. I don't know if Elsa, you can ask exactly maybe what you wanted on this question. Okay. Yes.
I think she just said that you have answered her question.
Okay. All right. Then do we always have to take insurance in countries of residence? Don't we have companies offering unbounded policies, especially that some countries' legislations offer better policies? Okay. Now, in terms of life insurance, I'm actually here, but I've got policies outside of Rwanda, and you have those some of these insurers in the Cayman Islands that offer insurance. So you can take out your life insurance outside of your country of residence. But you see, insurance is also being used as a way for money laundering. So insurers are now very careful, and the relevant jurisdictions are very careful that insurance is not being used for money laundering. So it has to be within the anti-money laundering guidelines. They'll ask you a lot of questions: why you're coming to invest here, your source of income. So a lot of questions will be asked. And of course, certain countries or certain jurisdictions will have better profits or interest rates or guaranteed rates. So you have to look at all those items. So you are not necessarily tied to this country. You'll see companies such as Unisure that are looking for opportunities. Sometimes they will work with a local insurer here, and you are able then to place your policy outside. It's just like the international medical aid insurances. If you go to King Faisal, I'm sure you've seen stickers of Cigna or Lancet. You've seen Cigna, but Cigna is not a registered insurance company here, but it would work in the same way. Yeah. So I don't know if I've answered the question for that particular person. Then asking advice for a friend. If a single person takes a life insurance, who would you advise they share this information with? It's mandatory for for married people to inform each other, since there is a form. Not sure how it works. No, first of all, it's not mandatory to inform your spouse of a life policy. Your life policy, and just like your group life policy, when you take out, even as the insurance, even your employer will give you a what they call nomination of beneficiary form. On that form, you can put your mother, your brother, your sister, and exclude your husband. Most men actually say when our wives know about our insurance, they are going to kill us, so they don't want to tell their wives. But the life policies, you select your own beneficiaries, and you don't have to tell your spouse about your policy. So even if you are married, that can be your secret, that I've got this life policy. You can take one policy and put him as a beneficiary, and take another policy and put your mother as a beneficiary. And by the way, with life insurance, you can have as many policies as you want. They can be 20, so long as your source of funds are clear, because they will do that check, especially for huge amounts, and ask you your source of income. Then a single person, you can take a life policy. And usually if your mother is alive, you can, your mother is always the most trusted person. You can tell your mother. But it is always wise to tell someone, so that in the case something happens, they are able to come and claim their benefits. So it shouldn't really be a secret, because if the insurer decides to keep the money, then what happens? Are they going to contact? Who's going to tell them that someone has passed on? So please tell someone. If it's not your husband, can be your mother. If it's a trusted sister, then tell the person that you feel that you trust, but always ensure that at the insurance company you've requested the form to complete your beneficiaries and sign off. Are there any other questions with regards life before I run through the other short-term policies?
No, I think you can move to the next one.
Okay. So in terms of short-term insurance, we've got your health insurance, and I'm sure that is the most popular cover, and probably 100% of the people here have some medical insurance. Especially now that there was COVID, everyone started running. Those that did not have policies from their employers started also taking up medical insurance. So medical insurance definitely provides you with the peace of mind that if something happens to you, you are befallen with illness, cancer, you are covered. We are not now trying to look for money to pay for your medical expenses. You're simply going to the hospital and your expenses are paid. Of course, the policies in Rwanda don't have very high values, so you could consider taking up international medical, which is of course a bit more pricier, but you have large benefits, and you are able to be transported to the United States, to South Africa, to India, wherever you would feel comfortable to get treatment. So of course, those that started, they say they have fire insurance. I don't know whether they took their fire insurance because they have loans or they were really safeguarding their property. So fire insurance, I think you really, whenever you're taking out any of these policies, remember to always consult. Because some people take out a policy and they are just given simply a standard fire policy because they'll get in and say, give me the cheapest policy. And cheap is not always the best. So remember, whenever you're purchasing insurance, to seek advice. There are various policies you need for your company. I will not go into detail because of our time, but I would want questions on various policies so that I can answer your questions with regards insurance. So those that want that have questions on their business insurance, let's talk now. I think Natalie, you can open the floor for discussion and we get as many questions of different types of policies so that it's more interactive and you're able to get answers for some of those queries that you have and why claims were not paid. And hopefully you'll know that we are not necessarily thieves. So thank you, ladies and gentlemen. I'm saying gentlemen, it's ladies only. Thank you, ladies, for letting me ramble for so long. Please, I welcome your questions. Thank you.
Thank you so much, Mandis. That was a very, very important discussion. And maybe for those of you who join us later, this is the journey of wealth creation. So some of you may be wondering why we are talking about insurance. I think she made it clear that insurance is part of that cycle: investment, financing, managing your debts, all the topics we have covered since the beginning of the year, as Natalie kind of like highlighted. Remember, when I started this discussion tonight, I just said something I learned a few years ago. Mandis, I'm going to start by opening the questions. So those of you who want to have something to say, query, and also share your experience, we are here to share. This is a platform, it's a safe environment. You can share with us what has worked for you, what has not worked for you. Maybe one thing I would like to say about the conversation I had like 2 to 3 years ago with Mandis, she was like, your first biggest asset is you. So for all of us here on this call, we have to understand that whether you are a homemaker, breadwinner, single income, what role do you play? Because if you can't guarantee, or maybe be a wise man like Mandy's father, and also a very wise woman, mother of Mandis, I don't think we'll have this opportunity to speak and meet Mandis from Zimbabwe. So all of you here, as we know, and then as we plan to buy a house, we have a mortgage, we pay insurance for our vehicles and our cars. If you happen to work at a very good company, they give you that coverage. But my question to all of you here as women, do we plan for the unexpected? Do we want to buy our peace of mind? You want to have a life better for yourself, but also for your loved ones. So I think, Mandis, I would like maybe just you to elaborate mainly on things like how as an individual level, we need to leverage on insurance for the wealth creation, but also that peace of mind. How do we balance those two together?
Okay. So in terms of security, when security, peace of mind, one of the benefits of insurance, as I said, is the element of peace of mind. Whenever you know that I am insured, my employer has provided a group life insurance for me, has provided medical insurance for me, you are never thinking about what happens if I fall sick, what happens if my child falls sick. You are actually giving your all in your job, because you know in the event that something happens, either to your child or to yourself, your children are secure and you don't have to be taking money out of your pocket. So that is in terms of the peace of mind. Security, your assets are protected. Remember, you have taken out a loan from KCB, from I&M for your mortgage. What happens in the event, the unfortunate event that you are injured and can no longer service your loan? Will my house be taken away? So here is insurance once again coming in to say, if you are injured, you are no longer able to earn an income, they then come in and pay off your loan and you get to keep your property. So there is security. Then in the wealth creation journey, we have talked about the endowment policy. So you're putting up money to build capital or to have money to invest in something. Yeah. So when you are putting money in an endowment policy or in a whole life policy, you are creating the whole life policy, you are creating the wealth for your children. So if something happens to you, your children's future is secured, they have something. So you have created wealth for your children, your beneficiaries. If you have taken out what we call a term life insurance, these are the policies that run not for a whole life, but rather they don't pay out only on death, they pay out after a certain number of years. You have built capital for yourself. This is the wealth creation that we are talking about. So there is more discipline, because someone will ask me, if I'm going to save, why not just put at the bank? Why not put a fixed deposit? Well, why not open a savings account? Well, insurance offers more discipline. Two, you have the element of the life coverage, that in the case of death, your beneficiaries will be paid something. But if nothing happens to you for the term of the policy, you will still get something, and you'll get something with interest. And what they will normally do, they will provide a guaranteed rate for that period of the insurance. And then in certain instances, you have policies which say with profits, where they say a policy with profits, which means every year, your policy, if the insurance company has made money on their investments, it is put back into and distributed amongst the policy holder. Then your sum insured goes up as well, which means your wealth is growing, and you then earn compounded. As your sum insured is growing, your interest, it means your interest is also going to be larger, because your investment keeps growing. So I hope I've answered Carmen on the issue of wealth, security, and peace of mind.
Thank you so much, Mendes. As I still have the microphone, I would like to know on this call, how many of you are, let's say, using your intellectual capacity as a consultant? Those of you who use your brain to generate income. How many of you? I'll just maybe just put your name and say I, and then in the chat box. And then my next question will resonate with you, and I would like you to pay attention. Anyone who does work as a consultant, and then who does work related to really putting together your business, and then the business is your brain. How many of you here on this call? Okay, Martha, Iris. Oh, we have so many people here. I'm just gonna put Mendes on the spot here. Something else, this is part of our conversation. She told me once, if you ever use your intellectual property, your mind, you need to insure your brain. Mendes, just take over and then explain to them why they need to take that kind of a policy.
like I said, I think I talked about it, that remember, for your business, you have people that are there to just the brains of the company. If something happens to you, then you have lost it. You have lost it all. So insuring your brain, you've really put me on the spot. So once again, you are a key man policy is covering your intellect. I mean, you have lost your money. I'm sorry, you have what is the English word? Can someone help me? You have lost your capacity to produce, and this can be due to illness. So once you lose that capacity, you are not able to earn an income, and so you need to insure your life. I'm sure you see a lot of people that also insure their assets, people that insure, people like Kim Kardashian will insure her butt, because that is what makes her money. And for those that use your brain, insure that, because that is what makes you money. Because if something is to happen to you, then what happens to your earning capacity? So anything that diminishes, so yeah, need for regular checkups, yes. So definitely insurance is pivotal to all your business. Think about it and remember you are protecting your income with insurance.
Thank you. Allow me just put it into a context. We are not asking you to go and do a mental checkup tomorrow morning, but what I'm saying, for instance, if you have a project and you have several consultants working on a project, and then you are supposed to really bring the capital intelligence in the project, and then there could be jeopardy if you don't deliver on time, you can be sued. So to those of you who are running like one man, one woman show, you run a company, and then everything is really around you, pay attention to this. This is something I didn't know about insurance, but I thought I should just let you know, ladies, on this call, because we have your demographic, we understand your stats, we know we have many people who really run the show, and then everything about your business and then how you run your home is just on you, and then it's all about the brain. So Mendes, I'm just going to now open this discussion. Anyone really can come in and mute yourself, and then just be concise and ask the question. Anyone want to go first? Any comment? This is the perfect time, and then we will wrap up soon. I know it's the time is very important. Anyone who want to go first? I think there was some question from Natalie.
So maybe I can just answer again.
Yes.
For all you professionals, there is a cover called professional indemnity. For all you consultants, this is now not a life policy. But remember, if you mess up someone's work, if you give me advice and I suffer financial loss, I can come back and sue you. So any consultant, consider taking a professional indemnity policy, because the advice that you give can be used to sue you if your client suffers a financial loss. For those that also sit as directors or senior officers in companies, remember the decisions that you make in boards can also result in you being sued. So decisions you make can result in you being sued, either for employment practices that you invested, you agreed to invest money in this asset, and we lost money, you can be sued in your individual capacities. So remember, consultants, make sure you have the professional indemnity cover, make sure you have the directors and officers cover for anyone that sits on board or anyone that is a senior manager, because you can be sued in your individual capacities. So I think back to you, Cam.
Thank you so much, Mendes. I'm just going to read some comments we have in the chat box. So Elsa is asking, in terms of investment strategy, to start climbing on your financial journey, then life insurance should be number one, ahead of real estate and the rest, etc. Because other investments most probably are taxed. So this is for superior as I accumulate with good interest, right? Correct?
Yes, but like I said, with regards to tax, let me send you, with regards to those tax things, let me send you the applicable laws. So I think Natalie gave you my email, then I can email you what are the tax implications on any of your life policies. I will send you also the pension, with regards pension. I'm not talking about the pension through RISSB. I'm talking about the individual pension plans. I will also send you what are the tax benefits and the tax implications. So please feel free to contact me on the issues of the benefits of tax for these policies, and I'll send you all the necessary legislation so that you are aware of how you'll be affected.
Thank you. And then there were like another two questions from Natalie. How can we in Rwanda purchase an annuity?
Well, if, for example, you come to liaison for your pension scheme, or whichever insurer you are using for your pension. What you will say is, at the end, way at the time of retirement, the lump sum that you would receive at retirement is what you would use to purchase an annuity. For those that don't necessarily contribute to a pension, you can still use your life insurance, the lump sum that you receive, to purchase an annuity. You'll say, I do not want the lump sum. So that payout that you get is used to purchase what you call an, you can say, I want an immediate annuity, so that once you purchase it, you start getting your monthly salary, or not salary, a monthly, you get something monthly. You can choose to have it monthly, you can choose to have it quarterly, but this allows you to get that annuity. So you just ask your consultant on how you'll be able to purchase an annuity, but it's mostly from your pension and your life insurance.
Great. She says also that it looks like there are many number of life insurance policy. How many types should we have? Maybe let's say, frame it for this particular conversation, young professional women. How many types of life insurance should we have? And maybe if you have a tip, like 2 or 3, which ones and in which order?
Okay. One, it depends on, first of all, look at what your individual goals are. So what I would say is, you don't necessarily need to take different types of life insurance policies. You could just have one, an endowment policy, which I've talked about, which will cover for whatever needs that you might have. But you could have several of those with different beneficiaries, because, like I said, life is not an indemnity policy, so you cannot put a price on someone's life. So you can take as many as you want. But as women, here you could have an education policy for those that plan to have children. So definitely take out the education policy. 2, just an endowment policy, which maybe you're planning to purchase a house, especially for those in their 25, below 30, plan now for buying a house or something, have just an endowment policy. Then have a whole life insurance policy that is specifically for your beneficiaries if something happens to you. So that one will only pay out, where it pays out only in the case of the unfortunate event of death. So you leave wealth to your beneficiaries. So those are the 3, but you can always just have one.
Thank you so much, Mandis. There's a question from Cami. She says, what is the maximum life insurance amount offered in Rwanda?
There is no maximum. It just depends on what you are able to afford. So there is a minimum premium, and then maximum you can take out as much as you want. But like I said before, life companies are particularly monitored for money laundering. So if someone here is 25 and says, I want a policy for $1 billion, definitely you'll be red flagged and you'll be asked, where is your source of income? How are you able to afford the premiums? So make sure when you are putting that, you have your source of income is legit. You are not getting it from any criminal activities, because definitely you will be flagged. But there is no issue of maximum. So whatever you want, you're able to insure.
Great, thank you. Ladies, anyone who wants to ask a burning question, this is your time, the floor is yours. Or any comment as well. Yes, Iris?
First of all, I wanted to thank you, ladies, for this very informative seminar. Great presentation. My comment is more on withdrawal of a beneficiary. In case you no longer wish for the beneficiary to benefit from the insurance, what would be your advice?
That is fine. At any time you want to change the beneficiary, you will contact your consultant or your insurer and ask them to remove the beneficiary. There are no implications on removing a beneficiary because your
Are they informed?
Sorry?
Do
No,
they
they're
get
not
informed?
informed.
Okay.
Even
Okay.
at the time of your life policy one, any insurance contract is confidential. So it's between you and the insurer. We are not supposed to share your information with a third party. And so anything that you're doing it in secret. Remember, your beneficiaries are your choice. So
Yeah.
so
But I'm wondering, since you asked us to inform someone, so you've already informed this person.
What I was saying is you know what will happen if you don't inform someone and then something happens to you.
Mm-hmm.
The insurance company might never know that anything happened to Iris because who's going to make the claim?
All right.
The insurer is not going to go and the insurer is not going to look for the beneficiary because they will not know that something has happened to you. If anything, the thing that would happen is if they see that your premiums have stopped being paid, then they write to you and say, we noticed that you have stopped paying your premium. Then someone becomes aware of it and becomes very angry when something has happened to you that this woman didn't tell me that they had such a policy, but it is your secret. Yeah.
Okay. So
Yeah.
suppose that I've informed my mother that I have this life insurance and I wish for her to benefit from it or to inform the insurance. And now I wish to withdraw her name and put, let's say, now I finally got married. I want my husband's name or my children's name. Should I go and inform her that now I've changed? Or how would you go about it? That's really my question about.
Now, the person that you inform doesn't even need to know who your beneficiaries are. The person that you inform is someone that you trust that when something happens to you would tell those people who they feel are your beneficiaries that there's a life policy. Let's go to the insurance company. So the person that you are informing does not have to be your beneficiary. It's someone that you trust that will probably not kill you to get the benefits, and someone that when something happens, she will know that let me go with her son to the insurance company to see what benefits are there.
Thank you so much, Iris. Elsa?
Thank you so much, ladies. Thank you so much, Mendes, for this presentation. It's very insightful. And I think I'll speak for myself. This has been very enlightening, to say the least. Now, my question is, we follow a lot of people in business, and they always say that the wealthiest people in this world are always leveraging life insurance as a financial vehicle to build their wealth. And it has always baffled me, and I've never understood quite how they use it. How can we use life insurance as a financial vehicle to build our wealth? Just, we understand we have to have sort of, the cover, life insurance could be, but what are they doing in actual effect to build the wealth they have? Because, when you look at, the 5 wealthiest people in this world, they say, yes, they are investing in real estate, they're investing in the businesses and the corporations they have. But when you dig deeper, you understand actually they have life insurance. And I think from what I understand is that they own some of the biggest insurance companies that are insuring or covering some of the biggest banks, obviously, that are behind some of the wealthiest fortunes. So maybe, I don't know if I'm taking this conversation outside of of this framework, but it's just for me as a person to understand, and how are they leveraging life insurance to build a wealth. Thank you.
I think if you look particularly in the developed world, you will notice that the government will never let a life company or an insurance company fold. If you recall the case of AIG in America at some point, where they had invested in hedge funds and were about to collapse, the government actually went in and put money, because they knew that if AIG collapsed, then the economy could collapse. So insurers usually make up the economy, especially in the developed world. If you come here in Rwanda, I think people, they just say, what are these insurers? Because we have not made any impact. But if you look at the developed countries, if an insurance company falls, then the economy is a bit shaken. AIG really shook, they really shook America. But they really make a lot of investments. From the money that you pay, all this money is pooled, it's invested in real estate. Actually, insurance companies have the largest investments in terms of real estate. If you go to Zimbabwe, we have Old Mutual. I think if not 60% of the of the buildings in Zimbabwe are owned by Old Mutual, and this is a life company. They invest in various vehicles. So when you use your money and you put your money with such companies, they're investing your money, and the returns are amazing. That's why you see people saying the life insurance, they get guaranteed returns. Now, with regards insurance, you'll have guaranteed, most insurance companies will say, when you bring your life policy, you'll have a guaranteed return. So if you put in your 1 million and they guarantee you an interest of 10% per annum for the next 10 years. But maybe what is actually happening in Rwanda is that sometimes the investments have dropped, and the market is basically at 5%, the banks are at 5%. But with the insurance company, you are getting a guaranteed return. So they cannot then change midterm and say, because the market is behaving badly, I'm now going to give you 5%. So they have to guarantee that return, that every year you're getting that 10%. So it's something that you should consider when you are taking out life insurance. Is there a guaranteed return, or just getting market movement? But at the same time, it can be a disadvantage, because when the market performs very well, then maybe you get less. But for those that are not risk takers, volatile things, especially now due to COVID, where people lost money, then that's the best way to go. So insurance has really put a lot, and it becomes a a real investment tool, because they are getting rent, they are getting, they are on the stock market, they are really investing, and people are getting a lot of money. So it becomes a vehicle for driving and building wealth.
Just two quick follow-up from your answer. One, in Rwanda, taking on from your experience, in Rwanda or in the region, would you say that interest rates that you gain from the life insurance is higher than the average interest that you get from a saving account from a bank on the high street? Number one.
Yeah.
And another question to that, what would be your advice, sort of just to, it's your industry, but as a woman to woman, taking from your advice, how are you investing? Are you doing, let's say, do you do 50-50, sort of like you were saying, maybe the economy does well and the interest goes up, so you lose. So you do some funds going into a life insurance because you have guaranteed a return, and some others can go into a sort of like a saving account, so that you are hedging your bets both ways.
Yeah, exactly.
I understand where we can be, because I'm just thinking now, why would I put my money into a saving account that is there? Just, the interest rate here I live in Uganda is so low. So why would I put my money there? I'd rather put it in a life insurance. Maybe that's guaranteed, but I don't want to put all my eggs in one basket. Yeah, thank you.
Definitely, woman to woman, I wouldn't say put your egg in one basket. And earlier on, when I was talking about my mother's story, I said when she got the life payout, she actually opened fixed deposits accounts for her children. So you maintain a life policy, and you can use the returns that you also got from insurance to invest in another, in something else. So definitely do not put your eggs in one basket. And also, even if you decide to take out numerous life policies, don't do it with one insurance company.
Good.
So if you decide that I've put the one life policy with Jubilee, because all these policies, remember, are different, and each insurance company will have their different rates and their different profit sharing schemes. So it is important that you do your research. And that's why I said use an insurance consultant, like a broker, who will guide you and show you that if you go to Sanlam, this is what you get. If you go to Prime, this is what you get. For you, you said you are in Uganda. So we'll say if you go to Jubilee, this is what you get. This is what you get from ICA. So don't even put your your eggs in one insurer. If you're going to go to insurers, go to different insurers. And if you're someone in Uganda, we have companies like here. If you come to Liaison, Liaison also acts as a personal financial advisor. So you get advice on where to invest your money. So they are not just going to tell you insurance. They are also going to tell you that there are these other vehicles. So get your advice from the relevant people. Go to a financial advisor. In Uganda, there are wealth managers such as UAP Old Mutual. They will give you the necessary advice and tell you you can invest in this and this.
Thank you.
Thank you so much, Elsa. Thank you. Camille, over to you now. Camille, you had raised your hand.
Yes, thank you, Carmen. This is Liz. Sorry, I joined with another account.
Sorry. Okay, go ahead.
Yeah, so thanks to Mendes, to you, Natalie, and the whole team for this very interesting conversation. I think I will go straight follow up onto Elsa's question in regards to interest rates, but I will formulate my question in another way. We know that we do live in countries where the local currency is volatile and it's always losing the value. Rarely is it increasing. So to me, I would think that it would be for saving purpose in the long term, and the best case scenario would be to invest in I would say more stable currency. Would say maybe USD or euros to make sure that we are not very touched by this inflation, and also we able, if not to get the full amount that we invested or plus some interest, at least we're getting we're not getting less than what we invested 10 years ago. So my question would be, how can we achieve that in this context? The second would be a comment. That would be my takeaway from this whole conversation, which has been really very interesting. I thought I knew about insurance, but I think I really did miss the most important, which is to, if you look at insurance as just a protection, then you would think that they are taking your money. But if you take it as a dual, in a dual perspective of savings and at the same time protection in case something happened, then you would understand that even though the interest rate is low, at least if something happened, you're covered and your loved ones are also covered. So to me, from this conversation, I would think that instead of putting my money in the bank on an investment account or a savings account that's giving me 5% interest or 10% interest, I would be, from now on, I would feel more comfortable, at peace if I do invest in an insurance policy. Third, maybe that would be my last comment, is really how do we get to know the best insurance companies to invest in? Yes, you've said that we can diversify. That's, I think, the best strategy. But on the other side, could you give us some tips on how to recognize a very trustworthy insurance company? Thank you.
Okay, thank you. Okay, with regards to your first question, you asked about a more stable currency. And then I would throw it back to you. If you open a fixed deposit with a bank in US dollars, what interest rates do you get? If you really look at it, when you put out this policy in US dollars, then your return is less, but at least you get, your money is actually increasing in value. And secondly, if you insure in your local currency, then rather take out a policy that has an increasing, what we call an increasing life policy, that every year it increases by a certain percentage so that it takes care of inflation. So within your premiums, just make sure you say, I want an increasing life policy whose sum insured is able to increase. And then if you look at it, there are foreigners coming, bringing their money here because these policies have a higher interest rate. When you go to UK, some of the returns are just 1%. So you're just, yes, you're earning an interest, and yes, your money is, the issues of inflation maybe are not bad, but the interest rates are not also as desirable as the currencies here. So you are seeing people from outside coming to actually invest for those high interest rates. And then with regards the issue you talked about. I think you said, how do I know the best insurer to use and what would be the best cover? Something that you need to think about is using an insurance consultant, and that is what they call an insurance broker. So in Rwanda, so the insurance broker will actually go out in the market, get the quotations for you, compare the covers, and then advise you that Prime has said 1, 2, 3, this they cannot cover. This is their cost. These are the advantages of Prime, the disadvantages of Prime. Then they take you Sanlam. These are the advantages. These are the disadvantages. So use a consultant. And that person is actually by BNR, that is by the central bank, regulated by the central bank. And if they ill advise, you can sue for the loss of income and their pay. You are paid. So brokers are told to take a professional indemnity cover. An insurance company, if you go directly, they are not obligated to really advise. They can tell you their product features, but who will tell you that my product has these weaknesses when they're trying to sell it to you? So a broker is an independent party and whose role is strictly to advise, so they will do all the work for you and give you the advice. And they will also give you the experience that they have with dealing with the insurers in the market in terms of claims payment, etc. I don't know if I've answered you, Liz.
I think you did. Well, we can spend the whole night on this very, very timely and important discussion tonight. So unless there's a really, really last minute comment or question, I would like just maybe to take this opportunity to give one person something, which is you can use the chat box, or you can maybe unmute yourself and ask the last question, to allow you to digest the information and for us to do like a take-home exercise. The purpose of this session and all our sessions from the beginning has always been, what do we do after? Because we don't want just to learn and to leave the knowledge just here. The purpose of our exercise is to learn and then apply what we have learned. As you heard, my journey, Natalie's journey, and Francine's journey. Every time we learn something, we put it into practice. So unless there's any question or any burning question from anyone here, the microphone is yours, the floor is yours. And then also we shared the information from Mendes. If anyone wants to get in touch with her directly, don't hesitate. We are happy to share as well. Right. It seems like everything is perfect. Natalie, anything?
Just wow. Wow. I don't know what to say. I learned a ton. And I think from the time you started sharing your personal story with what your father was able to do, I think it really brought to life the importance of life insurance. I'm one of those people who thought that insurance companies are crooks. I'm guilty of that. But I think since we started this journey with Carmen and Francine, it has been one of the eye-opening topic. And that's pretty much the reason why I even got the life, what you call endowment.
The education policy, yeah. The endowment, yeah.
Yes. Because we did an exercise on the concept of time value of money, and that was the exercise that really cemented the idea that I need an endowment education policy. So, Mendes, thank you so much for sharing your expertise with this team. And I think one of the participants, I think it's Pamela, have mentioned that it will take a whole change of mentality in our communities. And this is very, very true. Yes, it's really true. I just saw her raise her hand. Pamela, feel free to unmute and share.
Yes, hi. This was very interesting. Thank you so much. The reason why I said that, I just wanted to clarify why I said that, is because from what I've heard from another insurance professional is that in Africa, we have this notion of social insurance. Like there's always someone else who's going to be responsible for your kids when you pass, you know, someone else is going to be responsible for your family. It's kind of given, or at least you think it's okay. I don't need to do anything. I know my kids are gonna go to my brothers or my sisters or my uncles. So for us to think, to start planning ahead and say, hey, I need to make sure that my kids are left with something when I'm not around. It's gonna be a switch, even for ourselves to say, hey, I can actually plan for for the education of my kids while I'm still around, you know, and say for their secondary school, I'm going to put in some money, and by the time they get to secondary, I'm gonna be able to pay without too much trouble. So that's why I said this whole African, it's a good thing because we are we have this solidarity. We always there for each other, but it's also at the same time, it makes it very challenging and it's not so good, you know. So I just wanted to clarify what I meant by the change of mentality. It's a whole work we have to do on ourselves and to help the future generations as well to start thinking that way. Thank you.
Thank you, Pamela.
Thank you.
I really
Maybe
like
Natalie.
Yes.
Sorry, Natalie. I just want to jump in for 1 second and I'll pass the microphone to you. I think Mandy's something you wrote, and then I think your story is compelling to all of us here. What your dad and your mother did, I'm talking about how many years? I think Zimbabwe was way ahead of all of us. But the purpose, I would like to reinforce the purpose of why we are having this Professional Broke series for young women and young professional women is to say we are probably the best educated generation, the best informed generation, the probably highly qualified and then high earner from probably where our parents came from. So we need to start taking ownership so we don't pass the burden to our siblings, to our community, and then the wealth creation should start by us as a single person, as a journey. But we cannot do it, we don't have the power which we gain from knowledge. And that's why we have experts like Mendes to come on board. And then to help you, all of us here, as Nathalie mentioned and Francine, this journey has been very tough. We had to kind of like switch our mindset. We had to take tough decisions. Of course, we still love handbags, going out for drinks, lifestyle, but we also have to be responsible. So before we finish this session, I thought I should just highlight that knowledge is power. Yes, Pamela, knowledge is power. If you are not empowered with knowledge, I guess we're going to make the same mistakes. And then she mentioned, I think someone wrote in the chat box here, I'm just going to refer to what you wrote, that Zimbabwe, you are planning, the funeral is not a community thing. Someone will curse you if you have no thought about this. It's meant to happen. It's meant to happen one day. So let's just change the action of how things have been happening, our society, our culture, and then make it in a different way. So Natalie, over to you.
Yes, I really liked how Pamela just put it on the social insurance part, because this session, I think the learning from this session actually helps us be on the driver's seat and take control, right? Although we have to appreciate the fact that, yes, there's a solidarity within our community, but like Carmen had just mentioned, we don't need to pass on that burden. And just knowing that in the different African countries, they were so far ahead and they can plan while still living, I think, I'd say their culture values the same way is quite telling. So yes, I don't want to hold you I know we have gone a bit over time, and thank you for really being patient with us. Thank you so much, Mendes. I think just for just a couple of seconds is to just show you what's next for us. Like I have mentioned, we started this journey or this series back in January, and we'll probably we are planning to have our last session for the year next month, and it's going to be on estate planning. And so this session on insurance is actually very timely because it will lead us in the next session. So I really hope that you will consider joining us again next month. And to every one of you, again, thank you so much. Mendes, I hope that if at any point in the future we need you to come and speak to our women, I hope you'll be open to come and share again your wisdom and your expertise. So have a great evening, everyone.
Thank you. Have a good evening, ladies.
All right. Bye-bye. Take care.
Thank you.
Thank you. Bye-bye.
Thank
Bye.
you. Bye-bye.
Thank you.
Thank you.
Thanks.